Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reineck, and I'm joined this week by David Bartosiak, the editor of Zacks Momentum Trader and Home Run Investor, who has, I believe, seen his fair share of trades. Because this week we're going to dive into the lessons we've learned from our best trades. Our best, I guess, meaning just best, not necessarily winning. We had this discussion before we came in here to do this podcast. Do best trades mean winning trades, or can that include losing trades? And we concluded it could include losing trades.
Absolutely, because it's the best lesson.
Right.
You know, and sometimes the best trade you ever make is a trade you don't take.
Oh, so no trade.
So we're getting very philosophical,
Wow,
existential almost even here today.
Well, we're going to start off with what we didn't talk about this other than that one, whether or not it's winning or losing or all that. We didn't talk about what our lessons are or anything. So this is like
on your toes.
Yeah, it's a complete surprise.
Yeah.
Hear what your lessons are going to be, Dave. So I'm going to start with you because I'm curious to know what's your three best lessons.
Lesson number one: don't ever fall on your own sword. So what I mean by that is, if you have this great stock idea, right? You have some fundamental thesis on this stock, right? Twitter, for example, right? You're like, hey, Jack Dorsey's back. These guys started negotiating with the NFL. He's going to turn things around. This is going to be great. And you start to think this story that you're smarter than the rest of the market and you've got it all figured out, right? And then the stock starts going against you. Little by little, starts creeping down, creeping down, creeping down. Don't just sit there and say how the rest of the market is totally irrational and everybody else is stupid and you're a genius. You're not a genius because you're losing money, right? So don't fall on your sword.
That's a good one.
You can, I mean, you're going to be wrong. You're going to be
know
wrong.
when to get out if you're wrong.
Yeah, the market, we've heard it a million times over in different ways that markets can stay irrational longer than you can stay solvent. That's certainly the case. So you can't have, and this don't fall on the sword. It's the same thing with don't fall in love with the stock. It's the same message.
Yeah.
You're not smarter than the market as a whole. There may be periods of time where the market's disagreeing with what you're seeing, but if the market's running against you and continuing to run against you, you just got to give it up. Just say you're wrong and go on to the next one, because there's plenty of opportunities out there.
Okay, that's a good one, because I do think a lot of people definitely stay around too long, and because they do fall in love with it.
How many people do you think rode GLD down?
Plenty.
When that, as the house is burning down and they're holding on, and now somehow they think they're vindicated because gold has bounced to $1,200 an ounce, even though they bought it at the highs.
Right.
Yeah, you just don't fall in love with it. It's
okay.
Don't fall on the sword. Am I going to go all three? Or
you want me to do one? I'll do one. We'll go back and forth.
Yeah.
How about that?
Okay.
Okay. So my first one is to have. It's actually, well, not totally the opposite of what you just said, but mine is to have patience. And I have an example of a stock that we bought for Insider Trader a couple of years ago, actually, and it was Ulta. And we bought right after Mary Dillon, who was the CEO. She became CEO in 2013. She bought a chunk of shares in March of 2014. So she'd been there a little while. But shares had fallen at the end of 2013. They were kind of meandering around. She got in pretty cheap at $97.35. They went as low as $80 during that time period. And so she decided to dive in. We dived in with Insider Trader, but then they did nothing. So she bought in seemingly at a low point, but they didn't do anything. They didn't even go back up and approach $100 again until September of that year.
I think you get that a lot when a new CEO comes in, because the market's kind of like, okay,
they don't know. But there were a couple of earnings. They did miss like the first earnings report, or first or second one. She was in there, but it wasn't really her tenure yet, really. And then they were beating by this point, but no one, maybe they were just feeling her out. No one believed in the story. So you had to have a lot of patience to own this stock during that time, because we're talking about 4 or 5 months where it didn't do anything. It was in this like narrow trading range up and down, but
Right.
hardly going anywhere. But we stuck with it because the rest of the fundamentals were good. And then if you look at the chart now, obviously it's busted out. It's at these new highs up over $230, but you had to just have patience. So my number one lesson is, if everything else is checking out in the fundamentals and the story,
Right.
and in this case, we were following the insiders who were also buying, then you just, wait it out. And at least we were rewarded in this
Spoken
case.
like a true value investor there,
That's
Tracy.
right. That's, you can tell the difference between you and I. You're
Yep.
like, get out if it's bad. And I'm like,
Exactly.
stay in. It'll work out. But that was one where patience was a virtue.
Right. Well, it's
for
also
us.
different. I mean, there's a difference between I'm patiently waiting this out because it's down a
It
little
wasn't
bit
falling. Yeah.
versus this thing, all signs are pointing to you should eject immediately, and you're just you think you're smarter than everybody and you're going to hold on, and then you lose a ton of money.
Right.
So it's similar but different.
Okay, number 2.
Now, on the flip side, having patience when you're winning, so letting the winners run. So there's a momentum guy, right? So the buy high, sell higher kind of methodology here. It's like when you're in a stock, and this isn't. I want to kind of make the distinction here. I don't mean a stock that popped up really quickly. Go back to Ulta, slow, steady over time, right? Just keeps on creeping up. You're using your Zacks rank, so it's solid. Analysts are bullish on it. They keep pushing up those earnings estimates, and the stock keeps creeping on up and up and up. That's something you want to stick with. How are you going to get the 100% winner if you don't stick around for it? So
you're not one of those who likes it's up 20-25%, just take it and get out.
not if that's the only reason why you're doing it, right? So if you're looking at a stock and you go, "Oh, I'm up 25%, I'm good, rip it." I don't like that. I don't like it unless it's up 25%, but I can't really think of any reason why it's up 25%.
Right.
And we're actually going to get into that in my next lesson. But when it's something that's slow and steady building over time, because we've seen it time and time
Yeah.
again with the Altas of the world, with the Netflix
Home
of the world,
Depot.
with Home Depot, McDonald's.
Yeah.
The list goes on and on. If it's a slow and steady wins the race kind of thing, you need to have patience. Let those winners run.
Okay, that's a good one. My second one is this is a little bit different scenario than your number one scenario. It was fundamentals still do matter. So investors need to watch the fundamentals. So if you have a stock that's really selling off, but the fundamentals, and it's not just like, I believe in Jack Dorsey kind of fundamentals,
Right.
but it's actually sales are up 10% and it's still going down. I do feel like, those are opportunities that investors need to look at, and you can get really good trades by getting in there when other people, are not really seeing those fundamentals. So for instance, Whirlpool, that stock peaked in March 2015 at $217. So that was, well over a year ago. Then it had the big decline. It literally was on the decline for about a year. And then this beginning of this year, everything sold off, including Whirlpool. It hit new lows back down to like 125. Then they came out with earnings, which throughout this time period have not been bad, but everybody's freaked out about Brazil and even Asia, which is a small market for them. And then the US, like how long can people keep buying appliances in America? And then beginning of this year, they said they're still buying. North American sales up 5 to 6%. Then they had another earnings report in April saying the same thing. We're still seeing 5 to 6%.
And they're buying it everywhere except for Sears.
Well, yes, but JCPenney had a high appliance
JCPenney
sales.
killed it.
Home
Best
Depot, Best Buy, it's their
Yeah.
number one department. So all these things are good for Whirlpool, but still the shares, had that huge decline. That was a good buying opportunity because the rest of the fundamentals were still there, even though no one was believing it. Now the shares have rebounded off those lows. If you were able to take a chance and get in there at the beginning of this year, then you got in at a real good position to ride it higher because no one else was believing what they were saying.
I think
basically,
that's the best way to trade fundamentally, personally, is when it's like I always call it the baby with the bathwater scenario.
yeah,
Something else happens even within the sector, and everything gets beat up, or the market just decided they don't want to play here anymore,
Right,
and
right.
looks the other way, and something sells off, and fundamentally everything's still marching in the right direction. And then you go, well, that's why sometimes I like to take a look at, the pricing consensus chart. I'm always looking at that thing. And whenever I see these deviations in the pricing consensus, then I'm like, why is this happening?
so you want the consensus to still be going up,
And
and
the
then the
price coming
price is
down.
going down. Yeah, that's
And why
that's
is this
a good
happening?
chart.
And
Yeah,
then it's happening because of some silly fundamental reason that it's overdone, and then
Right.
those create great buying opportunities, I think.
yeah.
Which I don't get to pick up on in Momentum Trader too much,
See,
because
this is
then
in
they're never-
value. That's where I
Yeah,
found that
exactly.
one.
That's a total value play, and I'm
Yeah.
trying to find a way to trick people in Momentum Trader to buy those, but I just can't do it.
No, you got to go on the highs there, right?
Yeah, that's like when you're like a turnaround trader kind of thing, right? So
Yeah.
you're trying to, which is more suitable for home run,
Yeah.
to be honest.
Okay, so what's your third?
So my third is, again,
Uh-oh.
if there's a quick pop out of nowhere, especially with a small cap stock, right? Take it.
So how big of a pop are we talking?
So if you're up 20%, now this is the thing, we're going back to this whole 20, if you're up 25%, and I say don't rip it, right? If you're up 25% for no reason whatsoever, and you're a small cap, right? You take it. Because what I've seen happen 1,000 times, especially with small caps, they'll pop up, and then out of nowhere, secondary offering, and we're going to price,
The good old
$5
secondary.
below.
Yeah,
And then so you're like, oh, well, the reason why I couldn't figure out why the stock was up is because there was no reason for the stock to be up other than it was getting bid up ahead of the secondary.
yeah. Do you have any examples of that, recent ones? I kind
think
of
that
do.
happened with Neo Photonics,
Okay.
NPTN. That happened to me in a home run. Actually, it happened recently too. Let me see if I can find
They did
one
the
that just
secondary on you?
happened. Yeah, they did this. I mean, this happens so often. It's very frustrating for me.
Remember the Bank of California? We discussed that one on
Yeah.
the Momentum podcast because it was hitting new highs and it showed up on your Momentum screen a couple of times.
Yep.
I bought that one for value investors, surprisingly, a rare Momentum stock in there. And literally the day I bought it, like that evening, they did the secondary.
Yeah, that's what happens. Because, I mean, if you're buying at highs, it happens in Momentum Trader all the time.
Yeah.
Because I'm looking for small caps and I'm buying at highs. Okay. So when else would you want to do a secondary offering when your stock is doing well? Because you can get the most bang for your
Right.
buck.
Of course.
So it's frustrating because there's a lot of crossover, between companies that are looking to do that and companies I'm looking to buy. But it is what it is.
Let's say you don't get out before all this happens. So you're in it and you have a 20 to 25% winner and you're like, woohoo, riding it. And then bam, they offer the secondary and it's down, 10% on the secondary.
Right.
Do you stay in it in those cases?
First, you start swearing uncontrollably at your computer screen. Secondly, then you got to sit back and say, okay, why did I buy this stock to begin with? Was it purely a momentum play? And that's all I really liked about it. If the answer to that is yes, then you cut bait and get out of Dodge. If there is an actual fundamental story that you believe in, then okay, then you can go
Write
ahead
it out.
and write it out, or even add to it depending on. That's why it's with these, it's almost better to start to leg into these a little bit, especially if you have a hunch. If it's a
Yeah.
small cap, it's at a 52-week high. You don't really know why it's up, right? It's one of those things. It's like you should almost leg into it. But again, I'm talking like this happens all the time just because it feels like it happens
does
all the
feel
time.
like it.
But in actuality, it maybe happens once every 6 months or so, where I get caught.
Do we see more secondaries now that the markets are trying to, bust out to new highs again? The
Yeah.
overall markets, it's got to be, people saying, hey, now's the opportunity.
Yeah. And I don't necessarily believe that they think the window's closing or anything. I think it's just a function of the markets where it's like, okay.
Okay.
This is priced nicely. Let's go ahead and get some shares out, get some money in our pocket, and keep this thing rolling. Sometimes they take that money and they'll restructure debt that they have out there. They'll pay some off and get some new stuff for cheaper. But other times you're just like, why did you do this? Just totally to just submarine my trade.
Right.
It'll be like an insider wanted to sell a bunch. It's like, oh great, you needed a new Lamborghini in a guest house. Like, thanks so much for
Right.
destroying the stock by 15% so that we can all cry about it.
Yeah. That is the danger of the small caps, though.
Live by the sword, die by the sword.
Yep. Okay, so my third lesson, actually, this is interesting because none of ours have overlap. That's good. So we have basically 6 lessons.
And we did not plan it.
No. So my third one is don't follow the herd. I feel like you can get a lot of trades. This is also based on my value investing background.
Right.
But like a good example would be the energy stocks, totally decimated last year in kind of into this year, but certainly towards the end of last year. And everyone was so negative for obvious reasons as
Right.
crude continued to plunge down to multi-year lows. It wasn't pleasant. Tons of layoffs, banks saying that they were going to be in trouble with,
Yep.
loans and all this. It was dark and gloomy. Everyone on Twitter and StockTwits saying that, even big oil could go under and it was, doom. But if you had bucked that trend, if you took some chances in that sector, as Shiraz and I discussed on a couple of podcasts over the last 6 months, plays that he liked, and he was an oil analyst, so he,
Right.
at least has some better insights than some of the rest of us. You would be doing quite well, of course. Now, in hindsight, it's like, of course, you should have bought it at the bottom.
Well,
but
I don't want to bust out my E-Trade statement, but I was buying ORIG down in 80 cents, 75 cents. It was a penny stock.
wow,
It's at $2.
that's real risky.
It's at $2.40 right now.
Wow.
That's right.
So it's like a 3-bagger.
It's pretty good and counting. I mean,
Yeah.
this is a $15 stock. It's gonna happen.
Okay.
Just not
But
today.
that's even riskier than the ones I would even tell
Oh no, this
people
is
they
a
could have
madman
done.
thing. This is a roll
Yeah.
of the dice. Yeah,
Right,
for sure.
exactly. That
Well,
was
you buy
a-
the ConocoPhillips of the world. You buy
yeah.
the ExxonMobil's.
Like
the
I looked up
BPs.
Chevron, it's up 13% year to date.
Yeah.
But if you had the top pick of Shiraz both last year and this year was Pioneer Natural Resources. That's the ticker PXD, and that's up 30% this year because it's not a big oil, but
Right.
it's not these really little guys that could possibly go under.
Sure.
So you kind of got in there, but that's a big winner.
Yeah. The other one that I love, my favorite is Royal Dutch Shell B shares because the dividend is astronomical.
Is that one of those ones paying like 8% or
It
something?
It was. Now let's see.
That's kind of like BP. That's paying the big dividend so far too, like 6 or
Yeah.
7%.
So this is 7.5% right now on the
Wow.
B shares of the Royal Dutch Shell.
Yeah, so I really feel like a lot of good trades and some of my best trades can be found by bucking the trend. You do have to be careful so you're not getting like the Twitter kind of trade. But if it's an area where the entire sector is getting beaten down, sometimes you can get it in a cyclical because they're going to
Right.
do the cycle. If you can get it at the down end of the cycle and have some patience, then you can ride that,
Yep.
I think.
And I feel like we've got the best way to figure that out. It's all about that Zacks
True.
rank.
Well, yeah.
You start to see those turn around before everything else turns around, and then you can feel more comfortable about pecking at stuff like that.
Well, the energy was all 4s and 5s at the end of last year. So if you were following the rank, it would tell you don't buy them. But as you just said, it has turned around this year, seeing many more 3s. There might even be some 2s in there now.
Yeah, because you get all that negativity out,
Right.
and then it'll start to shift. It's like when it goes from a 5 to a 2, then like, oh, what's going on here?
Right.
There's a change. There's a change in the weather,
Yeah. And those estimates are starting to
and then you mix
rebound.
that with just seasonal demand here for oil. So this thing's gonna prop itself up for a little bit.
Is there anything else, any other like don't follow the herd examples you would have? I mean, that's the major one. What about like healthcare? We just had those are out of favor right now again. Is that a don't follow the herd? I've been kind of snooping around in it myself.
I don't know. I haven't. I haven't seen exactly where the herd's running on that one.
Okay.
You know,
I don't feel the hatred on StockTwits or
No.
Twitter for the healthcare like I
That's a
did
pretty
for
good
the
pulse.
energy.
That's
yeah.
a pretty good pulse you have on there. You can
Yeah.
go like, okay, do you hate me or
When they told me I was stupid about the energy stocks when I told people
And
to
like,
buy them,
load the boat.
then I knew. Yeah. So
yeah, you can
that's
pretty
a good
much
lesson.
short stock twits is probably the best idea you could ever have. Just the general pop, and I don't know what it is about people on stock twits that they're just. I got to be careful here, but there's a bunch
There's traders
There's a
over
bunch
there.
of snark though, right?
Yeah.
And then there's a lot of Monday morning quarterback stuff,
Right.
and you get this sort of, the current thought of the retail guy, and that's a lot of, and you can get a lot of information from that.
Yeah.
If you compare that to what's going on in the market, I think you can find trades that way too, because you're just like, okay, you guys are all looking this way, like why are you even looking that way?
Right.
Like you can see where, what you see on CNBC and what you see on the TV stations, what they're saying, and then what the public feels about it, and then you can make kind of your own decision which way you want to go.
Okay.
I guess that's the 30,000 foot view without getting too.
Maybe we should have a whole podcast on.
You should. Yeah, social media and just overall sentiment and how to fade the sentiment.
That could be interesting.
Oh, that's good
All
stuff.
right. Maybe in a couple weeks. Okay, so those are our 6 best lessons that we have on trades to help everybody else out there who's trying to find their own success in investing. And if you want to know even more, of course, Dave's articles are all over Zacks.com, including your excellent videos. People should check those out because I always enjoy watching those.
For a little comic relief.
Yeah.
And then you might mess around and learn something too.
Right.
You never
They're
know.
always interesting. And you can check out our other podcasts as well. Those are on Zacks.com and iTunes and, of course, SoundCloud.com. And be sure to check in with us next week for our next segment.